Today we're going to chat about what does the middle class think about insurance as compared to the wealthy, and really how do millionaires or billionaires understand the importance and the vitality of the product of whole life insurance and insurance in general compared to maybe me or Nate when we were starting our working career, and the 70-80% of other people that are similar to us in that
shift into more of like, wait, this is something that I actually want in my life. I feel like we've been talking to a lot more business owners lately, and when someone's making a valuation on your company, part of that valuation is based off of present cash flow. Your valuation comes from your present cash flow, and human life value is very similar. So when you're looking at someone's human life value, number is determined off of your present cash flow. So human life value is the future value of your present cash flow in a sense. And when people understand that, and something that Garrett talks about is the ability to essentially buy your net worth, and then you get to go play and build and grow into it simultaneously along the way. That flips the conversation drastically, because they go from, like we were talking about earlier, where it's like life insurance and people say, I need life insurance.
Welcome to the Cashflow Legendz podcast with your hosts, Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. Nate, Brock, and I are here. Brock, it is good to see your face. It hasn't been that long since we've seen you, but Nate and I have been doing more recording lately, and it always feels wrong when you're not with us. It feels like we're cheating on you.
Thank you. Yeah. Was it?
Okay.
I was here last year, right?
You were here. Yeah.
Last time.
Yeah. You were here last time, but we've started doing some.
Yeah.
We record
Facebook
one other time here, there,
kind of
Facebook Lives, and
you're putting yourself out there.
I know. Whether that's good or bad, we're doing it, huh?
Yep.
So it's good to have you here, Brock. Tell us, since we'll start with you, what's one thing you've learned over the past week that is going to really project into your thinking moving forward in your conversations? Because I know you've been in some training and you've been around some great minds the last couple of days.
Something that's been rolling around in my head right now was something that Bob Castellone, a mentor of mine, was talking to us about not too long ago, or this week actually. And what he said was, Bob talks a lot about the fact that our whole life insurance policy is a turbocharger to all the other things in our life, right? And what he said was, if you put all of your money in the turbocharger and you do nothing with it, it's not going to do anything, because a turbocharger cannot run the car on itself. A turbocharger makes an engine run better. And so if we have a whole life insurance, we've got to use it for other assets that are already in our life today. And so that's been something that's been rolling through my mind a lot over the last 2 days.
Nate, what about you? I know you've been out and about having lots of in-person conversations lately. You joined a new BNI group, which has been awesome to hear stories about that. What's kind of resonating with you right now?
I mean, we talk about this all the time, but just how so many people misunderstand what life insurance really is. And having a conversation around human life value is a lot of fun, because it just reframes everything for what it really is, and not what people assume that it is, as far as death benefit goes.
Perfect segue into our conversation today. I'm going to share what I've been learning this week. It has become very clear to me, and I'm having to relearn it often, that if I get upset emotionally to argue my point, I haven't spent enough time understanding what I'm discussing. And man, I wish I could have understood that in my 20s, in my 30s, because the moment that my emotional charge in my brain goes up, if you will, or my emotional, speedometer, or whatever you want to call it, is also simultaneously the moment that my logic and my reasoning and my ability to articulate what I'm thinking goes down. And boy, they happen fast. When that emotion shoots up, that logic shoots down. And so I'm I'm at least aware of it. We'll just put it that way. I'm not sure how well I'm applying it yet, but I'm aware of it. So
I've never
today we're
been really great at debate
gonna,
because as soon as I start feeling my heart rate go up, I remember the wisdom of scripture that says, be slow to speak, slow to anger. So I just kind of slow down and kind of process things. And so,
I've never really been good at debate just because I'm always right.
oh, that was such a Brock answer.
that's tough for people. You know, when you're always right, it's tough to have conversations with.
That's good stuff.
I don't always like telling people they're wrong.
Yes, you do. You like telling me and Nate that we could think about it differently, or asking us why we think about it. So,
Yeah.
I love that. That's good stuff. There's a little humor for you today. So today we're going to chat about what does the middle class think about insurance as compared to the wealthy, and really how do millionaires or billionaires understand the importance and the vitality of the product of whole life insurance and insurance in general compared to maybe me or Nate when we were starting our working career, and the 70-80% of other people that are similar to us in that frame. So when we say middle class, that's not a knock. I grew up middle class, okay? And so I'm not saying it's a bad thing. What I'm saying is it's the majority of the income earning people in America that foot the biggest bill. That's the way I think about it. Would you guys add to that, or are y'all comfortable with that definition?
That's fine.
And when I say foot the biggest bill, it's almost unknowingly. At least from my experiences so far, it's a lack of awareness. It's an ignorance, and not ignorance in an ugly way. Ignorance, and I just don't know. And so one of the main things I did not understand, and that's what we're going to lead into today, is that the myth of life insurance is just for dying and you only need a little bit. Okay, so Brock, I'll go to you first. This is a tongue-in-cheek thought, but it's true. If it were just for dying, don't we think it would say death insurance?
I would agree with that.
Okay.
Which is really what term insurance I think should be called. It's not life insurance, it's death insurance. Nothing happens unless you die within that given time period, right? But when you really think about permanent life insurance, whole life specifically, guaranteed for a fact it's going to be there when you pass away. You also know guaranteed at some point you're going to die.
Yeah.
We all live until we don't. And so permanent life insurance, whole life insurance can actually be a living value because, when you think about that death benefit, it can come alive. It can create other results for your family.
Nate, when you think about life insurance, would you agree or lean into this thought that I'm going to say, that it's often misrepresented, whether intentionally or unintentionally, about what it really is there for? And there's a lot of different perception around it that comes from the word insurance in general, because the word insurance in general, depending on if you're talking about property and casualty, home insurance, term insurance, cancer insurance, it's wild. It brings on this plethora of emotions for people depending on the experiences they've had with it. So first of all, how do you help people separate that when you're having the conversation about insurance in general versus life insurance versus dying? Like, walk through that.
Well, all the other insurance that we carry in our life, aside from life insurance, is an if this happens. It's your house insurance if something happens to your house. If it's your car insurance, if something happens to your car. Disability insurance if something happens to you. Like all those if situations. But life insurance is when. And so it's the one thing that you're guaranteed to use one day, that's guaranteed to kick in one day if it's in force, is your death benefit. But we have the I'll say we as the middle class, because Brandon, you and I, in our early working years, just bought into this idea that we only need life insurance for a little while in our life.
Mm.
And then eventually our assets will, I mean, we bought into what Dave would say, which is buy term, invest the difference, because when you're debt free, you won't need life insurance anymore. But he's said it on his show multiple times. He still has
Yep.
life insurance. And the reason for that is because wealthy people understand that a permanent death benefit gives you permission to make different decisions in your life financially.
Mm.
And so, like, I'm going through the retirement income certified professional designation right now. So I just enrolled in the American College, and right out of the gate, retirement income planning is all about the decumulation of assets. Wealth strategy is the accumulation of assets. Retirement income planning is the decumulation of that. And so there's going to be decisions that you have to make later in life that you get to make differently if you have a death benefit that is equal or greater than your estate.
All right, Brock, let's connect that to, you've been in rooms with more millionaires than Nate and I. I don't want to give you a big head, but you are in a lifestyle investor group that has some very successful people. And you have shared with us even on occasion that they've created tons of success in their life and they don't fully understand life insurance. And that's not a knock on them, because they're asking you to educate them.
Yeah.
So first of all, I want to point out multimillionaires, 7-8 figure exits, going, hey, I don't think I fully understand this. A desire to learn and to know, as Nelson said, arrival syndrome is one of the most dangerous things that is at our foot or our bed when we wake up in the morning ready to knock us out. That's the way I envision it. It is ready to uppercut us and destroy us.
Yeah.
So on the very successful end, what is a misunderstanding on that end that you've heard often before, or you've seen, or you've had conversations about?
Yeah. On the more wealthier side of things, it's not uncommon for someone to show up at my call, at a call with me and say, listen, I don't need the life insurance. I've got plenty of money, but people keep telling me to look at it. So I'd like to learn more. Yeah. And I always think it's hilarious. Like, I don't need any more money. Well, okay, well, or I don't need the life insurance because I have plenty of money. Okay, well, have you decided that you just have enough money that, like, that's all you need? Like, are you writing checks to the government or whoever else for everything that you don't need anymore?
Let me give you my account number. You can send a transfer right now if you have enough money.
Yeah. And the whole, I always think it's funny when people start talking to us about needs, and it's like, okay, well, find somewhere else in your world where you actually base your decision off of a need that you have. Like, let's be real. When was the last time you were like, I need this and I have to do this? Like, nobody's really doing that much out of necessity anymore, unless you're just like in dire straits. Right?
Yeah.
It's
a good point, Brock. Yeah, the misuse of the word need.
Yeah. You get to a place where it's about want. Like, do you really need, I was talking to this guy, 13,000 square foot home. Do you really need 13,000 square feet of a home? Right? His wine cellar was 4,000 bottles at max. Right? And he's never even filled it up. Like, do you need that? No, but you wanted it. You went and got it. The same is true, like, for life insurance. It's not about need. It's about want. Like, does it match the wants that you have? Like, do you want to pay less taxes to the government? Yes. Okay. Well, then that's probably going to be part of our discussion.
Yep.
Do you want to give more to your family and charities rather than the government? Okay. Well, it's probably going to be a part of our discussion. And so what we're doing here is not talking about needs. It's about wants, but it's not uncommon. Like, these guys that are super wealthy that'll come to me and they just don't understand it, mainly from the aspect of they're coming from the mindset of I don't need it. But it's always hilarious because I'll have these people come in that are worth low 8 figures that were told by 9 and 10 figures, hey, you need to go get life insurance. You need to look into this. And they're like, wait a second. These guys are telling me I need to get this, but I've never understood why. Can you help me? understand this. And I always just find that funny. Like there's always, and it's the same. It's hilarious how the reality is there's levels to wealth. Like you can't get around that. There are things
Yep.
that some people can invest in that you're not allowed to because they have more money and more whereabouts, right?
Yep.
So when you think about, um, when it comes to having savings in the bank, the wealthier you are, they are more than happy to have a year's worth of expenses or income saved up. You
Mm.
get into the lower bracket of income, people are like, I don't know. I feel like cash is trash. I need to go put it to work.
Yeah. Yeah.
There's
That's a
always an
very, go ahead, Nate.
I feel like we've been talking to a lot more business owners lately, and when someone's making a valuation on your company, part of that valuation is based off of present cash flow. Your valuation comes from uh, your present cash flow, and human life value is very similar. And so when you're looking at someone's human life value, that number is determined off of your present cash flow. So human life value is the future value of your present cash flow in a sense. And when people understand that, and something that Garrett talks about is the ability to essentially buy your net worth, and then you get to go play and build and grow into it simultaneously along the way. That flips the conversation drastically, because they go from, like we were talking about earlier, where it's like life insurance and people say I need life insurance and all, but then you find out that there's actually some exclusivity built around it, and everybody's human life value number is going to be different. Everybody's valuation number is going to be different, and the opportunity to secure that valuation is going to be different. And it starts to shift into more of like, wait, this is something that I actually want in my life,
Yeah.
because having that in place is going to give me the ability to maybe take a deep breath. If people are concerned about what they're going to leave to their kids or grandkids one day, and their present cash flow and their assets can support this strategy of building a whole life plan around everything, well, now you don't have to worry about disinheriting anyone as you're spending down your assets in retirement or anything like that, because you've got that tax-free windfall that's going to be going to the next generation one day. And so there's so much built around just understanding what life insurance is, understanding what whole life insurance is versus term, that just brings like a new level of peace of mind to people that they didn't really know that they could take hold of.
The point I like that you're making there, Nate, reminds me of kind of a conversation we had. So Nate and I have local events about once a month. We call them Peace and Perspectives. And we have ULC members who are already practicing becoming your own banker, IBC. They're shifting their mindset. And there's this inevitable thing that always occurs that reminds me of Nelson and becoming your own banker, where he says imagination becomes one of the largest things, the biggest things that occur when you start rethinking your thinking. Because we have families in there that a year ago thought life insurance was bad or not needed, or I only need as much as I need to pay off my bills. That's a very common thing. I got enough to pay off my house, I'm good. And then a year later, they're in there going, I can't wait to pay more premium. How can I increase my income earning potential? And how can I put these policies to work, like you said, Brock, with your time with Bob, to make new income streams come back into the environment that I store my capital, which said another way is just a place to pay premiums. And I'm reminded I was at a Nelson Nash coaching academy not too long ago, and this really stuck out to me. There's a guy there that been there, knew Nelson for a long time. And he said, let's first get real clear that the concept of becoming your own banker and the infinite banking concept, the idea of it, is already happening in our lives somewhere. We're trying to accomplish it, whether it be through a checking account, a savings account, farm equipment, equity in a house, leveraging, stock options, whatever the case may be. And Nelson said often that becoming your own banker can certainly include investments, but it's really where we store our wealth first. And when you begin to realize that, and you realize that the ability to store your wealth and pass it down is directly connected to your income creation, which you've already proven you can create, and everybody has a value there if they're working at all, then people start making the shift to go, oh, I don't just need that. I want to ensure that my maximum potential is protected. How do I get that? And that's when the aha happens. So Nate, you may remember this. We're visiting Saturday morning with our members, and we're chatting back and forth. And my dad brings up the point. So he's been practicing IBC for 8 years, and he did all the traditional things. Okay, maxed out his 401k, took the match, worked for a really, really good company. Retired 45 years later. And I'll never forget him saying this, and I don't remember what the question was we asked Nate, but Dad basically made the point, why in my years I've worked my tail off to get to, would I want to make less money? Why would I want to try to make less money because the tax code scares me? He's like, I've really had to sit and think about that because that's what I believed for a long time. But there's a key piece here, guys. He's 68, 67, 68, and he's willing to rethink his thinking. But how many times, Nate, have you and I heard that? Well, I'll just pay less, I'll just make less. What? Brock, is it your dad that says when every day Saturday you're gonna make less and spend less?
Yes, but I think he got that from Todd Langford.
Todd Langford. Okay. Yeah. When every day is Saturday, we just had a time where things slowed down around here. When every day is more like Saturday, you spend more money. Period. It's like being on vacation every day, or you become miserable and a grouch because you don't want to spend any money because you know every day's like Saturday. I believe Garrett calls that a miser, I think, in his book. So what do millionaires and even our clients who aren't millionaires but are headed that way with their mindset, what do they begin to shift and see that whole life really is, Brock? And some of that values that it brings to their family just by changing the location, just by adding one step where my money flows to premiums. What do they begin to see is, oh, okay.
Yeah, a lot of it I think is, back to the basics of where they're storing their capital. Like, oh, this is my wealth warehouse. This is where I warehouse my wealth and my cash. This is helping me to improve all the other things in my life of what I'm doing. That's actually super helpful. Thank you. And then just, at the end of the day, it is life insurance. And so a lot of their overall plan ends up showing how they're going to be able to pass on their legacy, but it's no longer a handout. It's a hand up to say, hey, let's keep this thing going for generations to come, not just, hey, I'm done. I spent all my money. Good luck to you guys.
I want to touch on something real quick, because if somebody's listening for the first time or they don't have a whole lot of depth or context of this, I get asked this often and I forget to say it. We are not eliminating traditional banks.
Yeah, definitely not.
They are in the middle of all money flow. The way I like to think about it is instead of now letting them use my deposits for their benefit only, I know the rules of the game and I'm using them to make deposits for my family and my future generations, paying premiums. But we can't get rid of the banks. They're in the middle of it all. So we're not saying you're going to be your own banker and you're going to go off the grid and nobody's going to know who you are. We are saying where you store your capital matters.
Yeah.
And now you and I were talking about this the other day. Carlos Lara wrote a book called The Perfect Investment, but it's also in the case for IBC. And he does this, not experiment, but this thing with groups often, where he starts having the groups name the things that make a air quote perfect investment. And there's 14 of them, liquidity, control, taxes go down, blah, 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 like we'd all mentioned. And Nate, what's the punchline when you get to the very end of it? Every time when people don't believe it.
Whole life insurance satisfies more of those things that people kind of build in their mind as far as ideal characteristics. whole life insurance satisfies so many of those things simultaneously, and people don't realize that. And I was talking to somebody about this the other day. If you stripped away the title of whole life insurance and you just said, hey, the bank came out with this product, and you started describing the product, some people would be like, well, that sounds like a pretty good deal, until you say whole life insurance and they're like, wait a minute, what?
Yeah.
Because it goes back to what Nelson was talking about. Most people's understanding of whole life insurance is based on someone else's misunderstanding. Once you lean in and really start understanding what it is, how it works, everything like that, then you're like, why aren't more people doing this? Why haven't I heard about this?
Yeah. Brock, one of my favorite things that I get to hear often, and I've gotten more bold in this, hopefully with humility and grace, to invite people along to never stop rethinking or refining what they think until they are confident that they have all the moving pieces in place of understanding what it is or what it isn't. What happens almost always early on, when I wasn't as aware of this, is I'd let them just stop way too early. And so now I meet them at the beginning and I go, hey, if you have no context of any of this, it is going to be a journey that is uncomfortable, possibly, because you're going to be taking old thinking out, getting the trash out of the brain, and you're going to be putting new thinking in. And then you're going to be building mental blocks around that new thinking. And what I like about that approach is that it allows us to meet people where they are, but also get to see where they're going.
Yeah.
And that's a lot of fun.
It is.
You know, when you see the light bulbs go off and they go, oh, I can exert the same energy I've been exerting for the last 2 years, 3 years, 5 years, 10 years, 15 years, 20 years, 30 years. And I can gain, not by magic, but by math and certainty and approval of having the health and the wealth to qualify, all these additional benefits just by changing the location of where my dollars go. That's exactly right. So now the question is, why wouldn't you do this? And if there's still hesitation, it's almost always because of fear of doing things different than what the world's doing in our typical conversations. Well, I don't want to try to explain this to my mother and father. I'm being dead serious. I've heard these things. You know, they've hated whole life for 35 years. But I've also seen the flip side where they go, this makes too much sense for me not to start taking action. And I've seen the mom and dad, the grandpa and grandma, come along and go, oh, we just had a misunderstanding. We were sold a faulty product for an agent to make money who wasn't teaching and coaching and educating us. They were just trying to street. What do you say, Nate?
Treat them and street them.
Treat them and street them, which is a whole different deal than, what we spend time doing. We're going to say, are you learning? Are you reading? So guys, if there was one challenge that you would leave for everybody listening, whether they are already practicing the use of becoming your own banker and the infinite banking concept and understand the value of permanent whole life insurance, or this is the first podcast they've ever listened to of ours or seen, what would be your one challenge from your conversations that you would leave, or a call to action for anybody?
I would say book a call and see what it's actually like. Get your questions answered, break all the myths, see where your disagreements are, and bring them to the table. See what happens.
Sweet.
Yeah. If you believe whole life insurance,
if you are right, so be it. You're right, and we'll come on here and say everything we've said about whole life insurance was wrong.
For over 100 episodes. Okay. You're throwing us under the bus like that, Brock. I'm ready. Okay. All right, Nate, what about you?
I mean, something very similar. Like if you believe whole life insurance is bad, if it's terrible, ask yourself why. Why do I believe it? Why do I believe that? And come, hop on a call with me and let's just talk about it. The thing that I love about what we get to do is we spend so much time just in the education mode of just helping people understand like where we're coming from, our experience, everything like that. There's no pressure to make decisions. Anytime somebody shows up on a call, the only decision they really have to make is, do I want to have another conversation? So if we get on a call, the only decision you have to make at the end of that call is, do I want to have another conversation about this?
And I would tidy it up and finish this way. And I got this from Brock's dad, Trent. If what we thought to be true weren't, if what we thought to be true was not, how soon would we want to know? That is completely in the hands of whoever's hearing that now, deciding what you want to do. And that works for anything in life, your faith, family, fitness, finances. If what we thought to be true weren't, how soon would we want to know? And what Brock and Nate and I know is we don't want to be the reason that you didn't have an opportunity to find out what you really know. So thank you for joining. We appreciate your time, your ability to listen to us and give us feedback. If you guys have any questions, we're always here and excited to do that. You can go to cashflowlegendz.com, and then you can book a call with Nate. You can also check out all other resources connected to that. But I would say make it a point to take action somewhere to get clarity if you're unsure. Have a great day.